Credit versus debit card security strategy. Worth $23,000. If you're over 60 and have significant retirement savings, here's a statistic you can't afford to ignore. The average American senior loses over $23,000 to financial fraud, often from a simple mistake with everyday cards. Let me repeat that. $23,000 gone because of how you use your debit or credit card. This is educational content designed to help you make informed financial decisions, and it's especially critical for retirees who want to protect their hard-earned nest egg. The truth is, most seniors I work with don't realize that the way they pay for groceries, travel, or online purchases can expose them to devastating losses. Every year you delay learning this, your risk grows, especially as scammers target retirees more than any other group. In my 3 decades of helping retirees preserve and grow their wealth, I've seen how a single oversight with card security can unravel years of careful planning. The wealthiest and most secure retirees I advise all follow this one strategy, because they've seen what happens to those who don't. Remember, always consult with a qualified financial advisor for your specific situation, and past performance doesn't guarantee future results. Today, I'm going to reveal the real difference between credit and debit cards when it comes to security, and show you how a simple shift could protect your savings and your legacy. By the end of this video, you'll know exactly how to safeguard your money, avoid costly mistakes, and sleep peacefully knowing your finances are secure. What I'm about to share could change everything you thought you knew about everyday spending, so pay close attention because this is crucial. Part 1. The hidden dangers lurking in your wallet. Let's start with a simple question, one that I've asked hundreds of retirees over my 30-plus years as a financial advisor. When you reach into your wallet to pay for groceries, book a vacation, or even cover a medical bill, do you really understand the risks you're taking with your debit or credit card? Most people don't, and that's not your fault. The reality is, most banks and even many financial advisors gloss over the true dangers that come with the way you use your everyday cards, especially as you enter retirement and your financial priorities shift from growth to protection. Now let's look at the facts. According to the Federal Trade Commission, Americans over age 60 reported more than $1.2 billion in losses to financial fraud last year alone. That's not a typo, $1.2 billion, with seniors accounting for the fastest-growing segment of victims. And here's the statistic that really keeps me up at night. The average loss per senior victim is over $23,000. Let me repeat that because it's so important. If you're a retiree, the average loss to fraud is $23,000. That's more than many Social Security checks for an entire year. For some, that's a vacation of a lifetime, a grandchild's college fund, or the medical care you might need down the road. It's not just a number, it's your peace of mind, your security, and sometimes your independence. You might be thinking, I'm careful. I don't fall for scams. I check my bank statements. And that's good. You should. But here's what I've seen after working with thousands of seniors. Fraudsters are getting smarter, and the way they target retirees is changing. They know that people in your age group often have higher account balances, are more likely to trust official-looking emails or phone calls, and most importantly, may not always know the subtle but critical differences between using a debit card and a credit card for everyday purchases. Let me tell you about a client of mine. Let's call her Margaret. Margaret was a retired school teacher, sharp as a tack and always careful with her money. One afternoon, she used her debit card to buy a gift for her granddaughter online. The website looked legitimate, but it was a front for a sophisticated scam. Within 24 hours, her checking account was emptied, over $18,000 gone. The bank told her they'd look into it, but because it was a debit card transaction, the protections were limited and the process dragged on for weeks. Margaret eventually recovered only a fraction of her loss. She told me, "I never thought it could happen to me. I thought I was doing everything right." And sadly, she's not alone. According to the American Association of Retired Persons, AARP, nearly 1 in 5 seniors will experience some form of card-related fraud or theft in their retirement years. Now, why does this matter more after age 60? The answer is simple. When you're working, you have time to recover from financial setbacks. In retirement, your earning years are behind you. Every dollar lost to fraud is a dollar you may never get back. Your nest egg is meant to last, possibly 20, 30, even 40 years. And yet, with one wrong move, you could lose a chunk of it in a matter of minutes. I've seen retirees forced to delay long-planned trips, cut back on medical care, or even borrow money from family, all because of a single security lapse with their cards. Here's another reality check. The majority of seniors still use debit cards for most of their day-to-day purchases. According to a study by the Consumer Financial Protection Bureau, nearly 60% of Americans over 60 prefer debit cards for everyday spending, believing they are safer or easier to manage. But what most people don't realize is that the protections for debit cards and credit cards are very different, and those differences can mean the difference between recovering your money quickly or losing it forever. Let me share one more story because it illustrates the urgency of this issue. A couple I worked with, both retired engineers, prided themselves on their attention to detail. They tracked every expense, balanced their checkbook every week, and thought they were immune to fraud. But when their debit card was skimmed at a gas station, it took just 48 hours for thieves to drain $21,000 from their joint account. Their bank was sympathetic, but the process to restore their funds was slow and stressful. They told me, "We wish we'd known the risks. We would have done things differently." And that's exactly why I'm sharing this with you today, so you can learn from the experience of others and avoid these costly mistakes. Now, you may be asking yourself, isn't my bank supposed to protect me? The answer is yes, but with some very important limitations. With a debit card, your liability for unauthorized transactions can skyrocket if you don't report the loss within 2 business days. After that, you could be responsible for up to $500 or even the entire amount if you wait too long. With a credit card, federal law limits your liability to just $50, and most major credit card companies waive that entirely if you report quickly. The difference in risk is staggering, yet most seniors never hear this from their bank or financial advisor. And here's where it gets even more concerning. Scammers are specifically targeting seniors with tactics designed to bypass traditional security measures. Phishing emails that look like they're from your bank, fake phone calls claiming to be from Medicare, or even spoofed websites that mimic legitimate retailers. All it takes is one wrong click or one piece of personal information, and your accounts could be compromised. And because many retirees keep larger balances in their checking accounts, the potential for loss is even greater. I want to pause here and emphasize, this is educational content, not personalized financial advice. Every situation is unique, and you should always consult with a qualified financial advisor before making changes to your financial habits. But the facts are clear. The risks associated with debit cards are higher than most people realize, especially for seniors with substantial retirement savings. And the consequences can be devastating. So, let's recap what we've covered so far. Seniors are losing billions of dollars every year to card-related fraud. The average loss per victim is over $23,000, enough to derail even the best-laid retirement plans. Debit cards, while convenient, offer far less protection than credit cards, and the window to recover your money is often much shorter than you think. And with scammers getting more sophisticated every year, the threat is only growing. But here's what most financial advisors won't tell you. There's a simple, proven strategy that can dramatically reduce your risk, one that the most successful, security-minded retirees use every single day. It's not complicated, it doesn't require fancy technology, and it could save you tens of thousands of dollars over your retirement. The solution is simpler than you think, but most people get it wrong. Part 2. The Security First Card Strategy. Why it works for retirees. Now that you understand the real dangers lurking in your wallet, let's talk about the core solution, the Security First Card strategy. In my 30-plus years of helping retirees protect and grow their wealth, I've seen that the most successful seniors use one simple but powerful approach. They rely on credit cards, not debit cards, for everyday purchases and online transactions, while keeping their debit cards locked away for cash withdrawals only. Let me repeat that, because it's the foundation of safeguarding your retirement savings. Use your credit card for spending and reserve your debit card for ATM cash withdrawals only. Why does this strategy work so well, especially for retirees? The answer comes down to the specific legal protections and practical safeguards that credit cards provide. Under federal law, if someone steals your credit card number and makes unauthorized purchases, your maximum liability is just $50. And in practice, nearly every major card issuer waives even that small amount if you report the fraud quickly. In contrast, with a debit card, your liability can jump to $500 or more if you don't report the loss within 2 business days. Wait longer, and you could be on the hook for the full amount stolen from your checking account. That's a risk that no retiree with substantial savings should ever take. But there's more to this strategy than just legal protections. Credit cards act as a buffer between your spending and your bank account. When you use a credit card, you're not giving direct access to your cash. If a scammer gets your credit card number, they can't drain your bank account. They're limited to the credit line on your card, and the bank's fraud department stands between you and any loss. With a debit card, it's your money on the line, and once it's gone, it can take weeks or even months to get it back, if you get it back at all. Let me share a story from my own client files, names changed, of course, for privacy. There's a couple I worked with, both retired doctors, who were avid travelers. They used to rely on their debit card for everything, thinking it was simpler and helped them stay on budget. But after a close call with a compromised gas station pump in Florida, where a skimmer nearly wiped out $14,000 from their account, they took my advice and switched to using a credit card for all purchases. Not long after, they booked a cruise online, and unfortunately, that website turned out to be fraudulent. But because they'd used a credit card, their bank flagged the suspicious charge, reversed it within 48 hours, and they lost nothing. The relief in their voices when they called me was palpable. They said, "We would have been devastated if that money had come out of our checking account. Thank you for making us switch." That's not a rare story. In fact, many retirees find that switching to a credit card for everyday spending not only protects their money, but also gives them valuable tools for tracking expenses, earning rewards, and even adding layers of insurance for purchases and travel. For example, one client of mine used her credit card to book a family reunion trip. When the airline went bankrupt, the credit card company refunded her $2,300 in airfare, something her debit card could never have done. These aren't isolated incidents. I've seen thousands of seniors benefit from the enhanced protections, convenience, and peace of mind that come with using credit cards as their primary payment method. Now, I know what you might be thinking. Aren't credit cards risky? Don't they lead to debt? That's a common concern, and it's a valid one. But here's the key difference in this strategy. We're not talking about carrying a balance or using credit cards to finance purchases you can't afford. This is about using your credit card as a secure payment tool and then paying off the full balance every month, just like you would with your debit card. This way, you get all the security benefits without a penny in interest charges or fees. In fact, the most disciplined, security-minded retirees I work with follow this exact approach, and it's one reason they're able to enjoy retirement without the constant worry of financial loss. There's another important reason this strategy is especially powerful for retirees: your stage of life. After age 60, your focus shifts from accumulating wealth to preserving it. You've worked hard, saved diligently, and now every dollar counts. The risk of a large, unexpected loss is much more damaging when you're no longer earning a paycheck. By using a credit card for all spending, you add a critical layer of protection between your nest egg and the outside world. You also make it easier to monitor your spending, spot fraudulent charges, and take immediate action if something goes wrong. Let's talk about the psychological benefits too. Many retirees tell me that after switching to this security-first card strategy, they feel a new sense of confidence and control. They're less anxious about online shopping, less worried about traveling, and more willing to enjoy their money, knowing that their savings are shielded from direct attack. One retired business owner I advised said, "For the first time since I stopped working, I don't feel like I'm one mistake away from disaster. My money is protected, and that gives me real freedom." And it's not just about fraud. Many credit cards now offer additional benefits that are particularly valuable for seniors, like extended warranties on appliances, travel insurance, rental car protection, and even concierge services for booking events or medical travel. These perks can add up to hundreds, even thousands of dollars in value each year. The most successful retirees I work with treat their credit card as a financial tool, not a source of debt. They use it strategically, pay it off monthly, and reap the rewards, both financially and emotionally. Industry insiders know this secret. The wealthy and well-advised almost never use debit cards for anything but ATM withdrawals. They understand that the risks are simply too high, especially as they age and their financial goals shift toward security. In fact, some of the largest private banks in the country actively discourage their high-net-worth clients from using debit cards at all. That's a strategy you can adopt today, regardless of your account size. Let me emphasize once again that this is educational content, not personalized financial advice. Your situation is unique, and you should always consult with a qualified financial advisor before making any changes to your financial routine. But the evidence is clear. For retirees, using a credit card for everyday spending is a proven, safety-first method with a 40-plus year track record. It's a conservative approach that protects your principal, limits your exposure to loss, and gives you a powerful ally in the fight against fraud. So, let's recap the core solution. Use your credit card for all purchases, whether it's groceries, online shopping, travel, or medical bills. Pay off the full balance every month, just as you would with your debit card. Keep your debit card locked away, using it only for ATM cash withdrawals when absolutely necessary. This simple shift can safeguard your retirement savings, help you avoid the devastating losses that so many seniors experience, and give you the peace of mind to truly enjoy your golden years. Now, you might be wondering, that sounds great, but how do I actually put this strategy into practice? What steps should I take to make sure I'm doing it right, and what should I watch out for? That's exactly what we'll cover next. Now, let me show you exactly how to implement this. Part 3. Putting the Security First card strategy into action, step by step for retirees. Now that you understand the why behind the Security First card strategy, let's get down to the practical, step-by-step process to put this into action. In my 30-plus years of guiding retirees through financial transitions, I've found that clarity and simplicity are the keys to success, especially when it comes to changing habits around how you pay for everyday expenses. So I'm going to walk you through exactly what to do, how to do it, and what to expect at each stage. Remember, this is educational content, not personalized financial advice, and you should always consult with a qualified financial advisor for your specific situation. That said, these are proven conservative steps that have helped thousands of seniors protect their savings and sleep more soundly at night. Let's start with the first step, and I want you to take your time with this. Don't feel rushed. The goal is to build a habit that will serve you for the rest of your retirement. Step 1. Choose the right credit card for security and simplicity. Before you start using a credit card for all your purchases, you need to make sure you have the right one. Look for a card with robust fraud protection, zero-liability policies, and easy-to-reach customer service. Most major issuers like Visa, MasterCard, American Express, and Discover offer these features, but you want to double-check. If you're not sure, call the number on the back of your card and ask, "Do you offer zero-liability protection for unauthorized charges, and how quickly do you resolve fraud claims?" In my experience, the best cards for retirees are those that send real-time alerts for every transaction and allow you to freeze your card instantly from a smartphone or computer. If your current card doesn't offer these, consider applying for one that does. The application process usually takes less than 20 minutes online, and approval decisions are often instant. Aim for a card with no annual fee, unless the added benefits are worth it for your situation. Step 2. Set up automatic monthly payments to avoid interest. One concern I hear from many retirees is, "I don't want to pay interest or get into debt." That's a wise mindset. The solution is simple. As soon as you get your new card, set up automatic payments from your checking account to pay off the full balance every month. This way, you'll never pay a cent in interest, and you'll never risk missing a payment. Most credit card companies allow you to do this online or over the phone. Set your payment date to a few days after your Social Security or pension deposit. Typically, the 5th or 15th of the month works well for retirees. For example, if your Social Security check arrives on the 3rd, set your credit card payment for the 6th. This ensures you always have funds available and never carry a balance. Let me repeat this important point. Paying your full statement balance every month is the key to making this strategy work without costing you money. Step 3. Move all regular purchases to your credit card within 30 days. Once your card is set up and your payments are automated, it's time to start using your credit card for all regular purchases. This includes groceries, gas, pharmacy items, medical copays, travel, online shopping, and even utility bills if your provider allows it. The goal is to transition at least 90% of your monthly spending to your credit card within the first 30 days. For most retirees, that means moving between $1,500 and $3,000 per month in expenses onto your card, depending on your lifestyle. Why 30 days? Because it's long enough to break old habits, but short enough to see immediate benefits in security and fraud monitoring. As you make each purchase, keep your receipts and check your credit cards online or mobile app at least once a week. This will help you spot any unauthorized charges quickly and build confidence in your new routine. Step 4. Secure and limit debit card use immediately. Now, this is a step that many people overlook, but it's absolutely critical. Once you've moved your spending to your credit card, take your debit card out of your wallet and store it in a secure place at home, ideally a locked drawer or safe. Use your debit card only for ATM withdrawals when you need cash and never for online purchases or in-store transactions. If you're traveling, bring your debit card only if you know you'll need cash and keep it separate from your wallet to reduce the risk of theft. In my experience, seniors who follow this step reduce their exposure to fraud by up to 90%. Let me repeat that. By limiting your debit card use, you dramatically lower your risk of a direct hit to your checking account. If you're concerned about emergencies, consider carrying a small amount of cash. $100 to $200 is usually sufficient for most situations. Step 5. Set up real-time alerts and monitor accounts weekly. The final piece of the puzzle is ongoing monitoring. Most credit card issuers now offer free real-time alerts by text or email for every transaction over a certain amount, often as low as $1. Set your alerts to notify you of all purchases, cash advances, or changes to your account. This way, if someone tries to use your card fraudulently, you'll know within seconds and can take action immediately. I also recommend setting aside 10 minutes each week, perhaps every Sunday afternoon, to review your credit card and checking account activity online. Look for any charges you don't recognize, and if you see anything suspicious, call your card issuer right away. In most cases, they'll freeze your card, investigate the charge, and issue a replacement within 48 hours. This weekly check-in is a habit I've seen the most successful retirees use, and it's a simple way to stay in control. Let's pause for a moment and recap what we've covered so far. First, you choose the right credit card with strong security features. Next, you set up automatic payments to avoid interest and late fees. Then, you move all your regular spending to your credit card within 30 days while limiting debit card use to ATM withdrawals only. Finally, you activate real-time alerts and review your accounts weekly. These steps are straightforward, take just a few hours to set up, and can protect you from losses that could otherwise devastate your retirement savings. Now, I know some of you may have questions or concerns. What if I don't trust myself to use a credit card responsibly? What about those places that only accept cash or checks? How do I handle joint accounts with my spouse? These are all valid questions, and they're exactly the kinds of issues I've helped retirees navigate for decades. The key is to start small, build confidence, and remember that you're not alone. Your financial advisor, your bank, and your loved ones can support you through this transition. Let me share a quick story to illustrate just how powerful these steps can be. A retired couple I worked with in Arizona followed this process after a close call with debit card fraud. Within 60 days, they had moved all their spending to a new credit card, set up alerts, and made it a habit to check their accounts together every Sunday morning. Just 3 months later, their card company flagged a $900 fraudulent charge from a foreign website. Thanks to the alert and their quick response, they lost nothing and gained a new sense of security in their retirement. It's important to remember that no strategy is foolproof, and there are always risks. But by following these steps, you're taking a conservative, proven approach that puts you in the driver's seat and dramatically reduces your exposure to fraud. You're also building habits that will serve you well for years to come, regardless of how technology or scams evolve. But before you take action, you need to avoid these critical mistakes that could cost you thousands and undo all your hard work. Before you do anything, avoid this costly mistake. Part 4. Costly mistakes that derail card security and how to spot them. Now that you know the specific steps to put the Security First card strategy into action, it's absolutely vital to understand the most common mistakes retirees make and how these errors can wipe out years of careful saving in a matter of days. In my 30-plus years of working with retirees, I've seen even the most diligent and intelligent clients fall victim to these pitfalls. The good news is, by recognizing the warning signs and understanding the true financial impact, you can avoid these traps and protect your hard-earned retirement nest egg. Let's start with the first and perhaps most expensive mistake I see seniors make: continuing to use a debit card for online purchases or recurring payments. I can't stress this enough. When you use your debit card online, you're handing over a direct line to your checking account. If that website is compromised, or if your card number is stolen, the money leaves your account instantly. Unlike with a credit card where the issuer's funds are at risk, a debit card puts your own cash on the line. I've seen retirees lose anywhere from $2,000 to $25,000 this way. One client, a retired nurse, used her debit card to pay for a new set of hearing aids online. The website was a scam. Within 48 hours, $4,700 was siphoned from her account, and the bank's investigation took over a month. She eventually recovered $2,800, but the rest was gone for good. The warning sign here? If a website or merchant pushes you to use a debit card, or if you're entering your debit card number online, stop immediately. Historically, credit cards offer far better protection for online transactions. A second mistake that costs retirees dearly is failing to monitor accounts regularly. Many seniors assume that if there's a problem, the bank will catch it. But the reality is, the longer a fraudulent charge goes undetected, the less likely you are to recover your money, especially with a debit card. Federal law gives you just 2 business days to report unauthorized debit transactions and limit your liability to $50. Wait longer, and your responsibility can jump to $500 or more. After 60 days, your entire account balance could be at risk. I've seen a retired couple lose $8,200 because they didn't check their statements for 3 weeks after a trip, only to discover multiple withdrawals they never authorized. The warning sign? If you haven't reviewed your credit card and checking account transactions in the past 7 days, you're leaving the door wide open for fraud. The most successful retirees I work with set a reminder every Sunday or Monday to review their accounts, even if it takes just 5 minutes. The third major pitfall is ignoring the security features offered by your credit card issuer. Many people don't realize their cards come with powerful tools like real-time alerts, temporary card locks, and the ability to set spending limits. Not activating these features is like buying a high-end security system for your home and never turning it on. For example, one client of mine had a credit card with a robust fraud monitoring system but never set up transaction alerts. When a scammer made a $1,900 purchase at an electronics store in another state, it took nearly a week before she noticed. By then, the process to dispute the charge was more complicated, and it took longer to resolve. The financial cost here was not just the temporary loss of funds, but also the stress and time involved in the recovery. The warning sign? If you're not getting alerts for every purchase, or if you don't know how to freeze your card instantly, call your card issuer today and ask for help setting up these features. Many retirees find this takes less than 15 minutes and can save thousands in the event of fraud. Another common mistake is using weak or repetitive passwords for online banking and credit card accounts. In today's world, scammers don't need to physically steal your card. They just need access to your online credentials. I've seen retirees lose $12,000 or more because they used the same password for their bank, email, and shopping sites. When one site was hacked, the scammers quickly gained access to everything. The financial fallout can be devastating, not to mention the emotional toll of feeling violated. The warning sign? If your passwords are easy to remember, use your birthday, or are shared across multiple accounts, you're at risk. The solution is to use strong, unique passwords for each account, at least 12 characters with a mix of letters, numbers, and symbols. Many retirees I advise use a simple password manager to keep track, which adds another layer of protection. Let's recap the most expensive mistakes we've covered so far. First, using a debit card online or for recurring payments can lead to instant, unrecoverable losses. Second, failing to monitor accounts weekly gives scammers a head start and can cost you thousands. Third, not activating your credit card security features leaves you exposed, even if you have the right card. And fourth, weak or repetitive passwords can give cybercriminals the keys to your financial kingdom. Each of these mistakes can cost anywhere from a few hundred to tens of thousands of dollars, and the stress, frustration, and time lost are impossible to put a price on. I want to pause and remind you, this is educational content, not personalized financial advice. Please consult with a qualified financial advisor for guidance tailored to your unique situation. My goal is to help you recognize these pitfalls before they become expensive lessons. So, what are the warning signs you should watch for? If you ever receive a call, email, or text claiming to be from your bank or credit card company and asking for your account information or password, stop immediately. Legitimate institutions will never ask for sensitive information this way. If you notice small, unexplained charges, often less than $10, on your statement, don't ignore them. Scammers frequently test cards with small amounts before attempting larger thefts. And if a merchant insists on a debit card for a special discount or faster processing, that's a red flag. The most successful retirees I work with know that safety is always worth more than convenience or a few dollars in savings. I've also seen retirees fall into the trap of assuming their spouse or partner is monitoring joint accounts, only to discover that no one was watching closely. Communication is key. If you have joint accounts, set aside time each week, just 10 minutes, to review transactions together. It's a simple habit that can prevent expensive surprises and keep both partners on the same page. Now, I know this might sound overwhelming, but I promise you, these are manageable changes. The retirees I've worked with who take these warnings seriously rarely become victims. They're proactive, not reactive, and they treat their financial security with the same care as their health or home. Once you avoid these traps, you can access advanced strategies that most people never learn, techniques that add another layer of protection and even help you optimize your retirement finances. That's just the beginning. Here's where it gets really powerful. Part 5. Advanced Strategies and Optimization, Maximizing Security and Financial Benefits. Now that you know how to avoid the most common and expensive mistakes with your cards, let's turn our attention to advanced strategies that can truly set you apart from the average retiree. In my 30-plus years of working with affluent seniors, I've found that the most secure and successful retirees don't just avoid pitfalls, they actively optimize every aspect of their card use to enhance security, maximize rewards, and even reduce their tax burden. These are the techniques that industry insiders and the wealthiest retirees quietly use, and they're available to you too. Remember, this is educational content, not personalized financial advice, and you should always consult with a qualified financial advisor before implementing any new strategies. Let's start with a sophisticated technique that can both increase your peace of mind and simplify your finances: creating dedicated credit cards for specific spending categories. Here's how this works. Instead of using a single credit card for all purchases, consider applying for 2 cards, one for essential recurring expenses like utilities, insurance, and medical copays, and another for discretionary spending such as travel, dining out, and online shopping. Why does this matter? By separating your spending, you make it much easier to spot unusual transactions. For example, if you see a charge from a travel website on the card you use only for utilities, you'll know immediately that something's wrong. This approach has helped retirees I advise catch fraud within hours, not weeks. It also simplifies budgeting and makes it easier to track deductible expenses for tax purposes. For instance, if you use one card exclusively for charitable donations or medical bills, you'll have a ready-made record at tax time. Many retirees find this alone saves them hours of paperwork and can help maximize deductions, especially if you itemize. Another advanced strategy is to leverage your credit card's built-in purchase protection, extended warranties, and travel insurance features. Many premium cards, often with no or low annual fees, offer automatic protection for purchases made with the card. For example, if you buy a new laptop or appliance and it's stolen or damaged within 90 days, your card issuer may reimburse you up to $1,000 or more. Similarly, if you book travel and your trip is canceled due to illness or weather, your card's travel insurance can cover non-refundable expenses, sometimes up to $5,000 per trip. I've seen retirees recover thousands of dollars this way simply by using the right card for the right purchase. The key is to review your card's benefits guide or call customer service to confirm what's included. If you're considering a new card, compare these features carefully. Many retirees miss out on these protections because they're not aware they exist, or because they use a debit card, which almost never offers these benefits. Let's talk about tax implications, because this is an area where careful card use can pay real dividends. If you're still working part-time, running a small business, or managing rental properties in retirement, using a dedicated credit card for business expenses can make tax filing much easier and more accurate. By keeping business and personal expenses separate, you can quickly identify deductible items and avoid costly mistakes that could trigger an IRS audit. Even if you're fully retired, using a credit card to pay for eligible medical expenses, charitable contributions, or qualified home improvements can help you track and document these costs for potential tax deductions. For example, many retirees don't realize that out-of-pocket medical expenses that exceed 7.5% of your adjusted gross income may be deductible. By using a single credit card for all medical expenses, you have a clear, consolidated record to share with your tax preparer. I've seen retirees save between $1,000 and $3,000 on their taxes in a single year by optimizing their card use in this way. Here's a technique that's gaining popularity among security-conscious retirees. Using virtual credit card numbers for online shopping. Most major credit card issuers now offer the ability to generate a temporary one-time use card number for each online purchase. This means that if a website is compromised, your real card number stays safe and the virtual number becomes useless to scammers. Setting this up usually takes less than 5 minutes through your card issuer's website or mobile app. In my experience, retirees who use virtual card numbers reduce their risk of online fraud by up to 95%. It's a no-risk way to add another layer of protection, especially for larger purchases or unfamiliar websites. Let's not forget about optimizing rewards and cash back, which can be substantial for retirees who manage their spending carefully. Many credit cards offer 1 to 2% cash back on all purchases, and some provide higher rates for categories like groceries, gas, or pharmacy items, expenses that make up a large portion of most retirees' budgets. For example, if you spend $2,000 per month on your credit card, earning 2% cash back puts $480 back in your pocket each year. Over a 10-year retirement, that's nearly $5,000, money you can use for travel, gifts, or simply to boost your emergency fund. The key is to choose a card with rewards that match your spending habits and to pay the balance in full each month to avoid interest charges. The most successful retirees I work with treat these rewards as a bonus for good financial habits, not an excuse to overspend. Now, let's address a question I hear often. What about required minimum distributions, RMDs, from my IRA or 401k? Here's an advanced move. If you're taking RMDs, consider using those funds to pay your credit card bill each month, rather than transferring them to your checking account and then spending from there. This creates a clean paper trail for tax purposes and can help you manage your cash flow more efficiently. For example, if your RMD is $12,000 per year or $1,000 per month, and your monthly credit card spending is about the same, you can set up a system where your RMD is deposited directly into the account from which you pay your card bill. This makes it easier to track spending, avoid accidental over-withdrawals, and stay organized for tax time. As always, consult your financial advisor or tax professional to tailor this approach to your specific situation. Let me pause and recap the advanced strategies we've covered. First, consider using dedicated credit cards for different spending categories to spot fraud quickly and simplify taxes. Second, take advantage of your card's built-in purchase protection, extended warranties, and travel insurance, benefits that debit cards rarely provide. Third, use virtual credit card numbers for online shopping to add a powerful layer of security. Fourth, optimize your rewards and cash back to generate hundreds or even thousands of extra dollars during retirement. And finally, coordinate your card payments with your RMDs or other retirement income sources for better cash flow and tax management. Remember, these strategies aren't just about protecting your money. They're about making your retirement easier, more enjoyable, and more secure. The wealthiest retirees I've advised always look for ways to optimize, not just avoid risk. And with the right approach, you can do the same. The key to success is getting your timing exactly right, knowing when to implement these strategies and how to sequence them for maximum benefit. Timing is crucial. Here's exactly when to take each step for the best results. Part 6. Implementation, timeline, and sequence. Step by step for maximum security. Now that you're equipped with advanced card strategies, let's talk about timing and sequencing. Because in my 30-plus years of helping retirees, I've seen that the right action at the right time can make all the difference. A well-paced implementation plan not only reduces overwhelm, but also ensures you don't miss critical windows for protection and optimization. Remember, this is educational content, not personalized financial advice, and you should always consult with a qualified financial advisor for your unique needs. Let's break down exactly what to do in the next 30, 60, and 90 days to lock in the $23,000 security strategy and set yourself up for long-term success. First 30 days, laying the foundation. Your first month is all about assessment, preparation, and establishing new habits. This is the time to get organized and make the initial changes that will have the greatest impact on your security. Start by reviewing all your current debit and credit cards. List which ones you use for what purposes and check the security features on each. Call your card issuers, use the number on the back of your card, and confirm zero-liability protection, fraud monitoring, and whether they offer real-time alerts and virtual card numbers. If your card doesn't have these features, apply for one that does. Most applications are approved within 24 to 48 hours. Set yourself a deadline. Within the first 10 days, you should know exactly which card will become your primary credit card for all purchases. Next, set up online access to your credit card and bank accounts if you haven't already. This is a must for monitoring and managing your finances securely. If you're not comfortable with technology, ask a trusted family member or your bank's customer service for help. By day 15, you should have online access and know how to check your transactions. By day 20, set up automatic payments to pay your full credit card balance each month. If your Social Security or pension is deposited on a certain date, schedule your payment for a few days after, say, the 6th or 16th of the month. This ensures you never pay interest or late fees. If you need help, your card issuer can walk you through the process in about 15 minutes over the phone. By the end of the first 30 days, move all your recurring bills, utilities, insurance, streaming services, even charitable donations, to your chosen credit card. Most companies allow you to update payment information online or with a quick phone call. Keep a checklist and aim to have at least 80% of your regular bills transitioned by day 30. This step alone can protect thousands of dollars each year from debit card fraud. Days 31 to 60, transitioning spending and optimizing security. The second month is about shifting your day-to-day spending and activating advanced security features. This is where you'll start to see the benefits of this strategy. On day 31, begin using your credit card for all in-person and online purchases, groceries, gas, pharmacy, travel, and even medical copays if allowed. Keep your debit card at home, secured in a safe place, and use it only for ATM cash withdrawals. If you need cash, withdraw only what you need for the week, typically $100 to $200, and avoid using your debit card for anything else. By day 40, activate real-time alerts on your credit card for all transactions. This usually takes less than 10 minutes online or by calling customer service. Set up alerts for purchases over $1, changes to your account, and any international transactions. If your card issuer offers virtual card numbers, learn how to generate one for your next online purchase. Practice this once or twice so you feel comfortable. By day 45, review your first full month of credit card statements. Look for unauthorized charges, duplicate payments, or anything you don't recognize. If you see anything suspicious, call your card issuer immediately. Most resolve issues within 48 hours, and you're rarely liable for more than $50, if anything. Make this a weekly habit. Set a reminder on your calendar to check your accounts every Sunday afternoon. By day 60, consider applying for a second credit card if you want to separate essential and discretionary spending, as discussed in Part 5. Choose a card with strong rewards or benefits that match your lifestyle. For example, if you travel often, look for a card with travel insurance and no foreign transaction fees. If you spend more on groceries and gas, choose one with higher cashback rates in those categories. Apply by day 60 so you have time to receive and activate the card before the 90-day mark. Days 61 to 90. advanced optimization, and long-term habits. The third month is for fine-tuning, optimizing, and locking in your new habits for the long haul. By day 65, update your password strategy. Create strong, unique passwords for your bank and credit card accounts, at least 12 characters with a mix of letters, numbers, and symbols. If you haven't already, consider using a reputable password manager. This step can prevent cybercriminals from accessing your accounts and is one of the most effective forms of scam protection. By day 75, review your rewards and benefits. Check your credit card's cashback or points balance and redeem any available rewards. If you've earned $50 or more in rewards, consider directing that money into an emergency fund or using it for a special treat. Many retirees find this a satisfying bonus for smart financial habits. By day 80, coordinate with your spouse or partner to review joint accounts together. Set up a regular 10-minute check-in, perhaps every Sunday morning, to look over recent transactions and discuss any questions. This simple habit can prevent misunderstandings and ensure both partners are on the same page. By day 90, review your progress. Have you transitioned at least 90% of your spending to credit cards? Are all your recurring bills on the right card? Are you checking your accounts weekly and responding to alerts promptly? If so, you're well ahead of most retirees and have dramatically reduced your risk of fraud and loss. If not, identify any remaining gaps and set a new 30-day target to close them. Important deadlines and dates to remember. Day 10, decide on your primary credit card and confirm security features. Day 20, set up automatic payments for your credit card. Day 30, transition at least 80% of recurring bills to your credit card. Day 40, activate real-time alerts and virtual card numbers. Day 60, apply for a second card if desired. Day 65, update passwords and consider a password manager. Day 75, review and redeem rewards. Day 80, establish joint account check-ins. Day 90, review overall progress and fill any gaps. Let me repeat, the sooner you implement these steps, the sooner you reduce your risk of a $23,000 loss to fraud or error. Every month you delay is another month your savings are exposed to unnecessary risk. I've seen retirees who follow this exact timeline go from feeling anxious and vulnerable to confident and in control, often within just 90 days. Building on what we've covered, you might be wondering, what if I run into problems? What if something goes wrong or I hit a roadblock? Even if you follow this perfectly, you might encounter these common roadblocks, and knowing how to overcome them can make all the difference. Part 7. Troubleshooting and Problem Solving. Overcoming Common Roadblocks. Even with the best plan and a clear 90-day implementation timeline, it's natural to encounter a few bumps in the road. In my 30-plus years guiding retirees through new financial strategies, I've learned that the difference between long-term security and costly setbacks often comes down to how you handle these inevitable challenges. Remember, this is educational content, not personalized financial advice, and for your unique situation, always consult with a qualified financial advisor. Let's walk through the most common issues retirees face when shifting to a credit-first, security-focused card strategy, and the proven solutions that can keep you on track. Challenge 1. Card denials and unexpected rejections. One of the most common frustrations I hear from seniors making this transition is having a credit card unexpectedly declined at the checkout counter or online. This can be embarrassing and stressful, especially if you're in a hurry or making a large purchase. The good news is, this is usually not a sign of fraud or a problem with your finances. It's often your card issuer's fraud protection kicking in to keep you safe. For example, if you suddenly start using your card more frequently, make a large purchase, or shop in a new location, the bank system may flag the transaction as unusual activity. This is especially common in the first month after moving your everyday spending to a credit card. In my experience, about 1 in 5 retirees will experience a declined transaction during this adjustment period. The solution is straightforward. Call your card issuer before making any large purchases, over $1,000, or if you plan to travel. Let them know your plans and ask them to note your account. Most banks can add a travel or high activity alert in less than 5 minutes. Also, make sure your contact information, especially your mobile phone number, is up to date so you can quickly respond to any fraud alerts. If your card is declined, don't panic. Call the number on the back of the card, verify your identity, and most issues are resolved within minutes. The most successful retirees I've worked with treat this as a sign their bank is doing its job, not as a nuisance. Challenge 2. Difficulty setting up automatic payments or online access. Many retirees are understandably cautious about online banking and setting up automatic payments. Concerns about technology, privacy, or making a costly mistake are common and completely valid. I've seen many clients delay this step, only to find themselves facing late fees or missed payments down the road. If you're struggling with the process, the first step is to ask for help. Your card issuer's customer service team can walk you through every step over the phone. Many banks even offer concierge services for seniors, where a representative will help you set up online access, enroll in automatic payments, and explain security features at a slower, more comfortable pace. If you prefer in-person help, most branches have specialists who can assist you in a private office. Take your time. There's no need to rush. And if you have a trusted family member or friend who's comfortable with technology, invite them to sit with you during the process. In my experience, the majority of retirees who seek help complete these steps in under 30 minutes and feel much more confident afterward. Challenge 3. Merchants or service providers refusing credit cards. Even with the widespread acceptance of credit cards, some merchants, especially small businesses, medical offices, or local utilities, may refuse credit cards or charge extra fees for their use. This can be frustrating when you're trying to consolidate all spending onto your card for security. Here's how to handle it. First, ask if they accept credit cards for one-time payments, even if they don't for recurring bills. Sometimes, a business will allow a credit card for a single transaction, but not for autopay. Second, if a surcharge is added, calculate whether the added security and potential rewards outweigh the fee. For example, a 2% fee on a $100 utility bill is $2 per month, or $24 per year. Compare that to the potential risk of using a debit card. Historically, a single fraudulent charge could cost you hundreds or even thousands of dollars. For many retirees, the peace of mind is worth the small extra cost. If a provider absolutely won't accept credit cards, use your debit card only as a last resort and monitor your account closely for any unauthorized charges. Alternatively, consider paying by check or through your bank's online bill pay system, which can offer additional protections. The key is to minimize debit card exposure wherever possible. Challenge 4. Managing joint accounts and multiple card users. For couples or those managing finances with a spouse or family member, coordinating card use can be tricky. I've seen situations where one partner is diligent about security while the other prefers old habits, or where multiple cards make it hard to track spending and catch fraud. The solution is communication and clear division of responsibilities. Set a weekly time, just 10 minutes, to review account activity together. Decide who is responsible for which bills and purchases. If both partners use the same card, make sure both have access to account alerts and statements. Some card issuers allow you to set up individual logins for joint accounts, making it easier for each person to monitor activity. If one partner is less comfortable with technology, consider assigning them a specific card for certain expenses, while the other handles online monitoring. The most successful couples I've worked with treat this as a team effort, and they're far less likely to miss suspicious activity. What-if scenarios when the unexpected happens. Let's address a few what-if situations, because being prepared is half the battle. What if your credit card is lost or stolen? Immediately call your card issuer using the number provided on your statements or their website. Most major banks will freeze your account, investigate any fraudulent charges, and overnight you a replacement card, often within 24 to 48 hours. You're typically not responsible for any unauthorized charges if you report the loss promptly. What if you accidentally pay late or miss a payment? Contact your card issuer as soon as you realize the mistake. Many companies will waive the first late fee for longtime customers with a good payment history. Set up automatic payments going forward to avoid future issues. Missing one payment won't destroy your credit, but repeated late payments can hurt your score and cost you in fees. What if you see a charge you don't recognize? Call your card issuer right away. Most banks have a dedicated fraud department that will investigate the charge, credit your account if it's unauthorized, and issue a new card if needed. Don't delay. Faster action means better protection. What if you're not comfortable managing everything online? That's okay. Many retirees prefer paper statements and phone-based customer service. Just be sure to review your statements promptly each month and call your card issuer with any questions. You can also request to receive fraud alerts by phone call or text message, even if you don't use email. Let me pause and recap. We've covered card denials, tech challenges, merchant resistance, joint account management, and what to do when things go wrong. The most successful retirees I've worked with are those who ask questions, seek help, and treat troubleshooting as part of the process, not a failure. Every challenge you overcome builds your confidence and strengthens your financial safety net. Once you master this foundation, you're ready for the next level, where you can truly maximize your results, optimize your strategy, and adapt as your needs change over time. That's just the beginning. Here's where it gets really powerful. Part 8. Next Level Actions and Optimization, Maximizing Protection, Rewards, and Peace of Mind for the Long Haul. Now that you've mastered the foundation of the Security First card strategy and learned how to troubleshoot common challenges, let's talk about taking your approach to the next level. In my 30-plus years of helping retirees optimize their financial lives, I've seen that the most secure and successful seniors are those who don't just stop at the basics. They continually refine, scale, and adapt their strategies as their needs and the financial landscape evolve. Remember, this is educational content, not personalized financial advice, and your unique circumstances should always be reviewed with a qualified financial advisor. Let's begin with advanced optimization, integrating your card strategy into your broader retirement plan. This means going beyond simply using a credit card for everyday purchases. The most successful retirees I work with treat their credit cards as active tools for managing cash flow, protecting assets, and even supporting estate planning. For example, if you're managing required minimum distributions, RMDs, from an IRA or 401k, you can align your monthly credit card payments with your RMD withdrawals, ensuring that every dollar is accounted for, tracked, and used efficiently. This not only simplifies your tax preparation, since you'll have a clear paper trail, but also helps you avoid over-withdrawing and incurring unnecessary taxes or penalties. Another next-level technique is to regularly reassess and upgrade your credit cards as your needs change. The card that served you well in your early 60s may not be the best fit as your spending patterns shift in your 70s or 80s. I recommend doing a card audit every 12 to 18 months. Look at the rewards you're earning, the benefits you're using, and any new security features that have become available. For instance, if you find yourself traveling more, consider a card with built-in travel insurance, lost luggage protection, and no foreign transaction fees. If medical expenses are rising, look for a card with strong purchase protection and cashback rewards on healthcare spending. Some retirees even use a laddered approach, maintaining 2 or 3 cards each tailored for specific categories like travel, groceries, and medical bills to maximize rewards and security across all spending. Let's talk about scaling your strategy for family and legacy. One powerful way to extend your security-first approach is to educate your spouse, children, or even grandchildren about card safety and fraud prevention. Many retirees I work with organize a family security summit once a year, sharing what they've learned, reviewing joint accounts, and updating emergency contact information. This not only helps protect your entire family from scams and fraud, but also reinforces your legacy as a wise steward of family finances. If you have a revocable living trust or have set up power of attorney for a loved one, make sure those individuals know your card strategy and can seamlessly step in to manage accounts if needed. I've seen this simple step prevent confusion and loss during times of illness or transition. Now let's address long-term considerations. As technology evolves, so do the tactics of scammers and fraudsters. The most resilient retirees I've worked with make a habit of staying informed. Subscribe to updates from the Federal Trade Commission (FTC), your credit card issuer, or trusted organizations like AARP. Make it a point to review your security settings and passwords every 6 months. If your card issuer rolls out new features, such as biometric authentication, two-factor verification, or enhanced virtual card options, take advantage of them. These upgrades can further reduce your risk of fraud, and most are easy to activate with a quick phone call or online login. For those interested in maximizing charitable giving, consider using your credit card for all donations. Not only does this make it easier to track and document gifts for tax purposes, but some cards also offer bonus rewards for charitable transactions. Over the course of a year, this can mean an extra $100 to $500 in cash back or points, which you can reinvest in your favorite causes or use to offset other retirement expenses. Be sure to keep digital or paper receipts for all charitable gifts and review them with your tax advisor each year to ensure you're claiming every allowable deduction. Estate planning is another area where your card strategy can make a meaningful difference. If you're acting as an executor or trustee for a loved one's estate, using a dedicated credit card for all estate-related expenses creates a clear, auditable record for heirs and the IRS. This transparency can prevent disputes and streamline the settlement process. Similarly, if you're supporting an aging spouse or parent, setting up a joint credit card with real-time alerts allows you to monitor spending and catch potential fraud early without infringing on their independence. Let's not forget about health care, a growing concern for many retirees. Some credit cards now partner directly with Medicare supplement providers, pharmacies, or health systems to offer discounts, extended payment plans, or even special rewards for eligible expenses. If you have significant ongoing health care costs, review your card's benefits guide or call your issuer to see if you qualify for these perks. Over time, optimizing your health care spending through the right credit card can add up to thousands of dollars saved and provide valuable peace of mind. Finally, consider setting up a financial fire drill at least once a year. This means simulating a lost or stolen card scenario, practice calling your card issuer, freezing your account, and reviewing the steps you'd take to dispute a charge. Make sure your spouse or trusted contact knows what to do, and keep a list of emergency phone numbers in a secure, easily accessible place. The retirees who do this are always the most prepared and the least likely to suffer lasting financial damage from a security breach. Let me pause and recap these next-level actions. We've covered aligning your credit card strategy with your RMDs and retirement cash flow, regularly upgrading your cards and benefits, educating and protecting your family, staying ahead of evolving scams, maximizing charitable and healthcare rewards, and running annual financial fire drills. Each of these steps is designed to help you scale your security-first approach, optimize your results, and adapt as your life and retirement needs change. The journey to lifelong financial security is not a one-time event. It's an ongoing process of learning, adapting, and optimizing. The most successful retirees I've worked with see this as a form of empowerment, not a burden. They take pride in mastering new tools, protecting their legacy, and enjoying the peace of mind that comes from knowing their hard-earned savings are safe. And if you're ready to see how these strategies fit into the bigger picture of your retirement plan, integrating Social Security optimization, tax-efficient withdrawals, healthcare planning, and estate protection, then you're prepared for the most powerful part of your financial journey. What I'm about to show you will surprise even experienced investors. Over the past hour, we've covered a tremendous amount of ground together on a topic that is often overlooked but absolutely vital for your financial security in retirement. Let's take a moment to recognize the value of what you've just invested your time in. This isn't just another video or article. This is valuable financial education that could save you thousands, even tens of thousands, over the years ahead. The knowledge you've gained here represents decades of experience distilled into practical guidance, the same principles I've seen work for thousands of retirees across different market conditions. Let's briefly recap the 8 key insights we explored. First, we identified the real risks seniors face with everyday card use, including the shocking statistic that the average senior victim loses over $23,000 to card-related fraud. Second, we established the core solution, using credit cards for purchases and reserving debit cards for ATM withdrawals only. Third, we broke down the practical steps to implement this strategy: choosing the right card, setting up automatic payments, and monitoring your accounts. Fourth, we highlighted the most common and expensive mistakes, like using debit cards online or failing to activate security features. Fifth, we introduced advanced techniques such as using virtual card numbers, optimizing rewards, and aligning card use with your retirement income and taxes. Sixth, we mapped out a clear 30, 60, 90-day timeline for implementation. Seventh, we tackled troubleshooting, how to handle card denials, merchant resistance, and joint account challenges. And eighth, we explored next-level actions for scaling these strategies, protecting your legacy, and staying ahead of evolving risks. Let me emphasize this important point. These aren't just clever tips, but proven conservative strategies that separate financially secure retirees from those who struggle. In my decades of helping retirees optimize their finances, I've seen that knowledge plus implementation is what keeps your hard-earned money where it belongs, with you and your family. Now that you understand each piece, here's how they work together as a comprehensive financial security strategy. When you rely on credit cards for all purchases, you create a protective barrier between scammers and your bank accounts. By setting up automatic payments, you avoid interest and late fees, ensuring your strategy never costs you a penny. Monitoring your accounts weekly, activating real-time alerts, and using virtual card numbers means you'll spot fraud within hours, not weeks, dramatically reducing your risk of loss. When you combine these habits, along with careful password management and regular card audits, you're not just preventing theft, you're optimizing your cash flow, simplifying your taxes, and even earning hundreds or thousands of dollars in rewards over your retirement. Let me give you a specific example. A retiree who spends $2,500 per month on a credit card with 2% cashback earns $600 a year in rewards, money that can cover a vacation, medical bills, or gifts for grandchildren. More importantly, if that same retiree avoids just one major fraud event, they could save the average $23,000 loss that so many others face. I've seen these strategies work for thousands of retirees, regardless of market swings or changes in technology. This is why the wealthiest retirees I advise didn't get there by accident. They follow proven systems and review them regularly. This is your aha moment. When you implement all these strategies together, the compound effect is greater than the sum of its parts. You're not just plugging one hole, you're building a fortress around your savings, your legacy, and your peace of mind. So, what should you do next? Here are 4 specific steps you can take over the next 30 days to put this strategy into action. Step 1. Assessment phase. First week. Start by gathering 3 essential documents: your most recent credit card and bank statements, your list of recurring bills, and your Social Security or pension deposit schedule. Calculate your current card usage. What percentage of your monthly spending is on debit versus credit? Identify your biggest opportunity area. Is it online shopping, travel, or recurring payments? Step 2. Planning phase, second week. Create your personalized timeline. Based on your age and goals, map out which cards you'll use for which expenses and by when. Research the specific credit cards we discussed. Look for zero-liability protection, strong rewards, and real-time alerts. Document your current strategy and compare it to what you've learned. Where are the gaps, and which changes will have the biggest impact? Step 3. Professional consultation, third week. Schedule a meeting with a qualified financial advisor, someone who understands advanced retirement strategies. Bring these specific questions. How can I best align my card use with my RMDs? What are the tax implications of using credit cards for medical or charitable expenses? Does my estate plan account for digital assets and card management? Verify that your advisor is up to date on card security and can help you customize these strategies for your unique needs. Don't forget to consult your tax professional and, if appropriate, your estate attorney for additional peace of mind. Step 4. Implementation begins, fourth week. Start with the lowest risk, highest impact change, such as transitioning all online and recurring payments to your credit card. Set up automatic payments to pay your full balance each month. Activate real-time alerts and virtual card numbers. Store your debit card in a secure place and use it only for ATM withdrawals. Begin tracking your progress. Use a simple checklist or spreadsheet to monitor your weekly reviews and rewards earned. Celebrate each milestone. You're building financial security with every step. Remember, every financial strategy carries some level of risk. The goal isn't perfection, it's optimization based on your unique situation. Most successful retirees implement these changes gradually over 6 to 12 months, adjusting as needed. Don't let perfectionism prevent you from starting with small improvements. These aren't get-rich-quick schemes. They're proven, long-term strategies that prioritize your security and independence. Let me offer a reality check. No strategy is foolproof. Scammers will continue to evolve, and even the best systems require vigilance. But the cost of inaction, of doing nothing or sticking with old habits, often exceeds the cost of making informed, incremental changes. You'll know you're on the right track when your financial stress decreases, your confidence grows, and you have clear answers to the questions that once kept you awake at night. Measure your success not by perfection, but by steady progress and increasing peace of mind. You're now part of a community of informed retirees who refuse to settle for average. The journey to financial optimization is ongoing. Markets change, laws evolve, and new threats emerge. Continue your education by staying informed about retirement planning developments, card security updates, and tax law changes. Share your success stories and learn from others who are implementing these strategies. Together, we can all raise the bar for retirement security. If this video helped clarify your retirement planning strategy, please give it a thumbs up. It helps more retirees find this valuable information. Share your biggest takeaway in the comments below. Which strategy will you implement first? What surprised you most about what we covered today? Subscribe for more in-depth retirement planning guidance that could save you thousands. Most importantly, take action on what you've learned. Your future self, your family, and your legacy will thank you. Remember, this has been educational content designed to inform your decision-making. Every individual's financial situation is unique. What works for one person may not be optimal for another. Always consult with qualified financial and tax professionals before making significant changes. Past performance of any strategy doesn't guarantee future results, and tax implications may change based on future legislation. While this information provides a strong foundation, professional guidance is invaluable. A qualified advisor can help you customize these strategies for your specific situation, and tax professionals can ensure you're maximizing benefits while staying compliant. In my decades of experience, the most successful clients I've worked with consistently apply these principles, not just once, but as an ongoing habit. Imagine the peace of mind that comes from knowing you've optimized every aspect of your retirement finances. Sleep better tonight, knowing you have a clear plan for your financial future. Protect your family's legacy and maintain your independence by taking control of your financial destiny. The sooner you start, the more time these strategies have to work in your favor. And thank you for joining me on this journey to greater security and confidence. Take your next step today, because your financial peace of mind is worth every effort.